Reagan, tell us what we did in class. Thank you, Derek.
Are you able to hear me?
Sorry? I was asking, what do you remember of?
Last week we introduced the class and then we went through the basic. We did the difference between a mission and a vision, and then we were able to highlight some of the
Uh-huh,
impacts
okay.
that are found in organizations.
Okay, all right. And what was anybody who remembers what was the relevance of the mission and vision and the values in particular to a study of corporate governance? Anyone who would like to comment? Oh, Ian. Sorry, Ian, I hadn't seen your hand. Okay.
We looked at Strathmore as an organization and we compared the vision and the mission, whereby we said that the mission is whereby it's the general purpose of the organization, and the vision is where the company seeks to achieve and where it hopes to be in the future. And the values are what's incorporated into the institution, whereby what's expected of the people within it and how they're expected to treat the people they serve. Yeah.
Mm-hmm. Very good. Yeah, very good. So the values are the standards of behavior that you can, the organization uses like a North Star to help people to work together how to towards achieving the mission and the vision, right? What is expected of everyone who forms part of that organization. Okay. It is good to have the mission and vision. Someone is trying to come in and it's only written B dash. So I don't know if that is your friend. Please tell him to rename himself because I cannot let him in by B dash. I don't know who he is. Okay. B underscore. I don't know if that is an intruder or that's why it's important to please rename yourselves. I still see on screen many names, not in the order of degree course, um, student number, and full name because that makes it easier for your attendance. Sometimes we get lost at, well, your name can get lost. It can be missed out when checking the attendance because your name is not properly put in the correct order. It can be overlooked. Okay, so ultimately, the success of the organization depends on the personal values of the leader, okay? Whether they are profit oriented at all costs or they are um, people oriented. So the personal values, the orientation of the leaders, the board of directors, those who had the executive executive office, those who form part directly in leading the operations in the running of the business, a lot depends on them, whether they themselves inculcate or adhere or go by the values that are set by the organization. Because people look at them, people look at them, and the culture of the organization depends a lot on the culture, the behavior, the way of working of the leaders of the organization. And that's why it's important um, for you people to learn. You know, the curriculum includes these subjects or these units of corporate governance, business ethics, communication, okay? Because they help you to acquire not only technical skills in your course so that you can be ready to work in organizations. You need obviously the technical skills. That's very important. But nowadays, what gives you an edge is your other skills, your people skills, your human skills, okay, interpersonal relationship um, skills. Sorry, I am admitting and admitting. So it's very important, and the success of the organization, as I was saying, depends to a large extent on the orientation, on the personal values of the leaders. The organization can succeed or fail, as we are going to see as you do some research in about corporate scandals in later in the class, right? So yeah, and that's why I was saying that this curriculum, that the courses that you have, it incorporates all these so that you don't only have technical skills, so that you have as Strathmore tries to, I mean, as an effort of Strathmore to follow on that commitment to give you all round So I was saying that okay, the curriculum helps you not just to have technical skills, but also, well, other skills that may be what will be relevant to your work, so that you can also be people not only of people with professional prestige because of your technical skills, but also people of high moral standing, people of integrity. Of course, these classes as such do not make you, how do you say, do not make you a moral person. They facilitate moral in the sense that a good person, okay? But at least they give us, create some awareness of the importance of cultivating ethically ethically good behavior or morally a moral behavior. Okay, so because ultimately it is the personal choice. No? It is what you decide how to live, how to conduct your business, how to behave in your place of work, what values you want to foster and to promote, what you really want to achieve. But in any case, it's an effort to help you, to help all of us, to know what is really important. There are many things that happen in the organization, but the irony of it, with all the things we are going to talk about, the reality is that the core of all this is personal value of each of those leaders who run the corporations, who are involved in the running of the operations of the business, right? We will speak of regulations, codes, theories, well, those who are key players in the organization. But the bottom line is that the success of the organization will depend on the leaders, on their values, on what they want to go by, principles they want to go by. So now that most of the people have come in, let's look at the course outline. Now, in case I lose my connection again, I don't know what we are going to do. Maybe after this, I'll just give you some things that you can use for the group work. Meanwhile, I'm sharing my screen so that we can look at, because I think I forgot this in the last class. Looking at the after looking at the ground rules, then I didn't now go through the course outline. Right? I hope you can see my screen. So long as we have these few minutes, it's so intermittent that I am sorry about this. But okay. So for the course outline, we have as the overall, well, the course description is that the course explores. Can you see the screen? I hope you can see it.
Yes, you can.
Thank you, Samuel or John. Okay. um, just to be patient. Hopefully, if I get disconnected, I'll be able to connect back. But let's hope that it doesn't give us more problems. So the course explores the governance and sustainability issues that current corporate leaders and their organizations are facing, and how to address the governance and leadership needs of business and social enterprise leaders. Sorry. Okay. Uh, okay. Sorry. The screen is not so good. So I want to go back to normal. All right. Um, okay, it was refusing to go down. So now I hope that it comes down. So it will provide the students with knowledge on corporate governance functions and will accord you solid grounding on what is central to corporate governance and sustainable business success. Um, yeah, so I think this has to do with what I have been explaining to you in the previous class and earlier in the earlier part of the class, the importance of and the role of the leaders, because they are the ones who make things to work out, to succeed, or to fail. They are the protagonists, the main protagonists. And you never know. No? Maybe after your courses, you start your own businesses. And for all we know, we have we will have a big corporation courtesy of your hard work and your genius. That's what happened to Bill Gates and Steve Jobs and Zuckerberg and all these people. No? Okay, that we cannot take that for granted. Maybe you wake up suddenly from being from some tragic position while in college and you become so enterprising. And before you know it, you are spearheading so many things in society. So okay, so the intended learning is that you be conversant in key concepts and issues on corporate governance and social responsibility, and be able to function as a capable member or leader of a diverse team. You may be a member or you may be a leader, but that you can play your role in the best way possible, right? So that you can critically evaluate corporate governance frameworks and assess pitfalls and forestall effective leadership and governance. What are the possibilities that you fail so that you can avoid them? What are the risks? Okay. So that you can develop a sound approach to corporate social responsibility that can help bring about balance and compatibility into the seemingly competing interests of the stakeholders. We have the ongoing debate about stakeholders and shareholders, who are the one who should be given priority by the corporations. And in fact, we are going to, hopefully we can have our reporters will be able to give us a good discussion on that so that you can discuss state-of-the-art research papers in the field of corporate governance. Basically, it will give you a good understanding of, well, the basic, the fundamentals of corporate governance. It's not a matter of entering into complicated things, but that you know the fundamentals of how governance frameworks work, how they function. So we had just a general introduction by looking at the mission and vision and values. It is important for everyone. We see what happens. Organizations may have uh, mission and vision and values, guiding principles. But all the members need to be aware, people have to be educated, no, of the role that play in the organization, of the importance of those values, so that they can form part, they can actually be integrated in their activities. If it just remains in the paper, then it doesn't mean much. And unfortunately, many organizations have that for you know, just for the records, for having beautiful ideas, but it's lacking in application as such. So then we'll speak of cooperation as a business concept, because we cannot speak of corporate governance without understanding what a corporation is. And okay, just general ideas about stakeholders, types of cooperation, how does a business get incorporated, how does it become an incorporation, a corporation, sorry, by incorporation, by registering in the appropriate government or yeah, government body that that authorizes the existence of these corporate institutions or business corporations. And then we speak of corporate governance, a concept, who shall explain it, what's the purpose, and why the interest of corporate governance. And we will speak, you'll do a bit of research on different corporate scandals, you'll work in groups just to find out what went wrong in some organizations, and then we'll speak of benefits, advantages, and pillars of corporate governance. Then theoretical perspective, well, agency theory and stewardship theory will hopefully do a bit of debate on these two, and the same with the shareholder theory and stakeholder theory. Those who read business ethics have an idea of these, but we shall approach it uh, from, well, explaining it following a debate. But also, there are many other theories that apply to corporate governance, but these are the core, the key important, rather the key theories that apply to corporate governance. As I want to tell you, yeah. So what are the key players in corporate governance? We have the shareholders. Shareholders, who are they? And what are their rights and responsibilities? What are the types of shareholders? What does shareholder activism mean? And how do you protect the minority stockholders or shareholders? Board of directors, what are the duties and responsibilities? What are the fiduciary duties? These are duties that uh, someone or some people acquired by the fact that they have been given a task. No? They are to act on behalf of another, and therefore they acquire fiduciary duties. Okay. So speak about the board of directors. What about independence of the board and objectivity? What about the size and diversity? How is it important? How are they important? What are the types of directors? What are the subcommittees, no, in the board? How are the board members selected? How are they compensated? How do they live? Can they be sent away? What does business judgment rule mean? And then executive management. What are the duties of the CEO? Duties and responsibilities. What does it mean by CEO duality? How are the executive members compensated? What are the incentives? What, how do the succession take place? So then also we speak of regulations. So we're talking of fundamentals. Okay. So the first one was introduction, general ideas about corporate governance, and then what are the what are the ideas that constitute, that are implied in corporate governance, what are the fundamentals? So there are the theories that support them, who are the ones who are directly involved in corporate governance, what are the regulations, what are the principles and codes that are used, that are relevant in corporate governance. We have the Cadbury Report, which was the first ever code that applied, that dealt with, addressed corporate governance issues concerning board of directors, how they to operate. They introduced the importance of different types of committees, subcommittees. They talked about training of the board of directors. They need to be educated also on how they are to perform their functions. And then there have been developments as corporations evolved, so to speak, in the way they are run. They are now different. These codes, they are now different codes depending on well, from different countries. And to some extent, we'll talk of when we talk of the codes, we are actually talking of international corporate governance because these are guidelines that are used now by now the different countries. You are from the UK or the US. This is South Africa. This is the OECD principles, Organization for and Cooperation, Economic Cooperation and Development. I think. I hope I didn't uh, mislead you there. I think that's what it means. So they issue guidelines on how the corporations are to work in order to achieve sustainability, to be successful and to be sustainable. And then approaches to corporate governance. We have what is called principle-based and rule-based. There are uh, boards that are called said to be unitary and multiplier, and then also there are organizations that follow uh, family-based model in uh, approaching corporate governance. Ethical issues. Well, guys, the students who have done business ethics are familiar with these. These are very clear with, um, I mean, these are very ideas for the conflicts or ethical issues that are directly linked to corporate governance. Okay, and then we'll speak of corporate governance from the Kenyan perspective. Here, okay. So we'll speak of the regulatory bodies, the Capital Markets Authority. This is the body, the authority that regulates the capital market business that deals with securities, financial securities, um, like stocks and bonds. You have the National Stock Exchange, where where the companies are listed so that the shares can be bought by the public. Okay? You have the Central Bank of Kenya, and then Kenyan approach to corporate governance. Is it principle based? Is it rule based? Okay, and then samples of governance structures in the Kenyan firms. And then corporate social responsibility. We introduced here the legitimacy theory. Probably we didn't speak about this in statistics, or maybe we did. We spoke of the triple bottom line, Archie Carroll's pyramid. If I'm not wrong, forget the people. I remember the faces of the people who presented this. Okay, then corporate social responsibility in Kenya, the implementation of um, how is this sustainable development goals in a Kenyan context, right? So the main core that we use here is the book of Sanjay Anand, Essentials of Corporate Governance, and Malin, Corporate Governance Fourth Edition. I think these are available in the rest are are references? Well, mainly because they could not be accessible online, but they are good reference materials. So we talked about this already. Yeah, exams, and you have group presentation. Maybe I'll ask you to make a video or some, for example, well, board of directors meeting, things that have to do with corporate governance activities, right? It's like to simulate, no, the board of directors or the CEO's meeting, different activities like general election, whatever. Let's see about that. And then assignments will be that's part of the assignments. Okay, so I hope you are still there. I haven't lost you this time. I am still there. Okay, so now let's look at my slides. If you can see this, let me see whether it's going to behave well. If not, okay. So we're going to talk about corporations and stakeholders. Obviously, these internal stakeholders will be discussed more at length by those who will report about the stakeholders theory. But just to introduce the topic, and then the types of corporations, types of companies, and the incorporation process and the kanyang context, and then some research on corporate scandals, why the interest in corporate governance, and advantages of good governance. I'm not very sure. Okay, so I think the polling activity was meant to be on the first day, which I didn't have. I just asked you the question. So, what are corporations? Now, let me put you in breakout rooms so that you can discuss, um, just find out, discuss among yourselves about corporations, how are they organized, and what are their roles in society. Basically, it's not a matter of you don't need to go very deep, but just to understand the concept. But it helps when you find it out for yourselves so that the learning becomes active learning. Okay? So now, how many rooms? So, so I hope, okay, the idea is to say define uh, cooperation, how they organized, and then what are the roles. But yeah, just general ideas, okay? Share with us, or I didn't give you enough time to find out. Okay, Nema, could you share what your group has found out? Are we all back?
So for my group, hello, can you hear me?
Yes.
We define a corporate as a business organization that is formed to meet specific objectives of members or stakeholders and is owned by people who use its products, supplies, or services. And it is formed, the organization of a corporate basically it is formed separate from the owners of the business.
Okay, very good. Thank you about that. Thank you for that. Okay, anybody else? Group breakout room 3. Breakout room 3. What did you find out?
We defined a corporation as a large company or group of companies that are recognized as a single entity.
Uh-huh. That's all. Okay. Okay, very good. Let's see. Breakout room 4. Room 4, the group of Victor Onyango. Anyone from breakout room 4? Caesar, Khalid, Nicholas, Lewis, and Walter. Walter, thank you.
Hello.
Oh, Magak. Magak. Okay.
So you defined a corporation as a group of companies which come together to achieve a specific goal.
Mm-hmm.
The organizational structure, they are managed by a board of directors
Mm-hmm.
who have to have a unanimous decision in who have to make a unanimous vote in decision making. But you had a question.
Mm-hmm.
Is the CEO a part of the board? Is he above the board of directors, or is he just the same level as them?
Okay, we're going to see that now. Fine. We'll hold on. Wait for the answer. We'll look at it.
Okay. Okay.
Okay. Huh? Very good. Uh, breakout room 5. What did you come up with? Victor Hinga, or Tyron? Tyron, go ahead.
It's much more or less what the others found out. Just found out that corporations have separate legal entity from the stakeholders, and usually this the CEO, just to answer Walter's question, we form him as a highest employee that's appointed by the board of directors, and for their roles, we found out that their roles should be in line with both the shareholders, that's the owners, and the stakeholders such as the employees. It should match them and yeah, just set it up.
Very good. Thank you. Thank you for that. Okay, so anybody who would like to add anything that they have found out that has not been said? Come on. Yes, Hinga. How do you pronounce your name?
Oh, it's Hinga.
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 Hinga. Okay. Thank you. Is that Victor?
Yes, that's Victor.
Okay. How are you? Very good.
Okay, just to add on to what Tyron said,
Mm-hmm.
we identified 3 levels of
Mm-hmm.
a corporation,
Mm-hmm.
where we found that the shareholders
Mm-hmm.
elect the directors, then the directors appoint the officers, who are the CEOs, the presidents, the treasurers, the secretaries.
Uh-huh. Very good. Very good. Thank you. Thank you, Victor. Okay, now may I repeat that kindly request everyone to rename yourselves. You know, you have to write your degree course, your student number, and your full name. Okay, that makes it easier for the one who is going to check your attendance and to confirm that you are not lost in this class, that you actually belong here. Okay. Don't make me remove you because I don't understand your name here. Okay. So now let's look at the corporation. So they have said no that I'm going to close this. Okay. That's it's legal entity. I think it was Thailand. It's a legal entity or a legal person or a legal fiction. They are all meaning the same, a legal entity. Sorry, I lost the PowerPoint. A legal entity that is distinct and separate from its members. Okay. What happens with a corporation is that it is unique in its structure. Okay, as compared to other businesses. Now you have an ownership, part ownership of that corporation, but then sorry. Oh. But okay. So, but then it's unique in the sense that you are an owner, but you do not own the assets. Okay, we can look at corporations from the context of structure, the general um, layout. When you speak of corporation, you can speak of how they are organized, and they are unique in terms of organization and ownership. Okay, it's a legal entity, legal person, or legal fiction that exists, that is distinct and separate. But why do they say that? It's a business organization that the owners do not own the assets. The owners do not own the assets. But even before that, it says a legal entity because, or a legal person, because it acts like a person. Okay, it acts like a person in a sense that you can enter into contracts, you can transact business, you can be represented, it can own property, okay? It can open bank accounts. It acts like a person. That's why it says legal person, a legal entity. But then it's independent from its members, independence from its members, um, because precisely that. You are an owner or a part owner, but you don't own the assets. Okay, I was just thinking we can go back to the idea of the Latin root of corporations is corpus. Corpus means body, body of people. Okay, and the traces of corporate activity dates back to the time of Justinian the Emperor, Roman Emperor, Eastern Roman Emperor, in the 6th century, where they have within their area of jurisdiction municipalities or private associations, government um, groups, or
Yeah.
traders,
Oh,
group
okay.
of traders that precisely do that. No, they can enter into contracts, can own properties, they can receive gifts and legacies, and things like that. So there was already trace of corporate activity from that time. But historically, corporation as such, as we know now in the modern times, was started by the Dutch and the English. You know, when they chartered companies to operate or to do things on their behalf. That is to extend their power or influence on other countries, for example. So there was the Dutch East India Company that was like the first corporation because okay they were dealing with textile, with silk, with spices mainly. But then it was a first corporation because they issued already paper documents to indicate share ownership in the organization, and also that the liabilities of those owners were limited to the contribution to the assets uh, that correspond to the shares in the business. Okay, so now we have that corporation as it is now, different types. But basically, the concept of corporation is that the owners do not own the assets. That's why they say it's distinct and separate from the members, and their liability is limited to the share of ownership, to the share of stock in a company. So when you speak of proprietorship and partnership, when you have a business, you're say a sole proprietor, you are the owner of the business, you start a business with your own capital, and then you are the one who manages the business. You are the owner and you are the one who operates the business. And when it comes to liabilities, or to assets and liabilities of the business, you are the assets are yours. It's not in the name of the business. As much as the business is under your name in the first place, but the assets belong to the owners, and that the liability, when it extends further, when it's more than your capital, the personal properties of owners can be touched, can be used to pay or to meet the obligations and the liabilities. Also, with the partnership, when you probably your business begins to grow and you want to have others to partner with your business, or you want to start once when you start your business a partnership or with others. So there is what we call general partnership, where you have your members, you contribute and you form part of the operations, and you have limited partnership where you have at least one general member. By the general member or general partner, it means like you are a sole proprietor. The assets, you have a claim to the assets, and the liabilities, your personal property will be attached to meet the liabilities. But the limited partners are those that contribute to the business, but they do not participate in the running of the operations of the business. Okay. So, but then with this limited partnership, there are partners who are answerable with the obligations with their own personal properties. Okay. So, it's as the business continues to grow, it became more difficult. So they wanted more people to raise capital, more people to participate in the business, and they don't want their properties to be attached. So then the limited partnership, or rather the corporate structure, came about, what became very useful. So it is organized in such a way that the owners, the owners are the ones who own share or equity in the business, and that is simply means when you own a share of stock and stock in the corporation, you are a shareholder, you um, you are a part owner. Okay, you are a piece owner, a part owner of the corporation, right? But then you all those things that we have said in terms of ownership and liability. But you can, okay, this will be discussed more extensively by those who are going to report on the key players. But you participate to some extent with decision making by making proposals. You are not directly involved in the running of the business. Make proposals, you participate in election, but yeah, in the next slide we'll see more. And then they appoint, elect board of directors to represent them, to represent the interest of the shareholders in the corporation, in the company, right? So then the board of directors are the ones who are concerned with the overseeing, the directing, governing the operations of the executive members, those who are directly involved in the operation. We're the executive. So the board of directors um, act on behalf of the shareholders. That's why they have fiduciary duties, and also um, they are concerned with maximizing or protecting the interests of the shareholders, maximizing the value, maximizing the interest, making it profitable by directing, governing, monitoring the activities of the executive members of the organization, the ones that they appoint. So now the executive are the ones, this is the CEO, the CFO, and the chief operating officer. Sometimes chief marketing officer is included there. Um, so they are the ones who are directly responsible for the running of the business. And because they have also been entrusted by the board of directors, they have also fiduciary duties. And okay, the board of directors intervene, or they are the mediator, so to speak, between the executive and the shareholders. But then the executive have also the duty to maximize shareholders' value, right? So then, as usual, is not responding again. So then, as to ownership, as to ownership, uh, there are those things I have already explained. Okay. So that's why they are, as I was saying, it's unique because the ownership of assets and the operation, the running of the business and the operations are separate or distinct from the corporation. I mean, from the shareholders. Okay. Sorry, just hang on a bit. So they don't have claim to the assets. The assets don't belong to them. But then they have a share in the profit. That is now they receive it in forms of dividend. When the corporation incurs or acquires profit, they can share part of it with the shareholders, and they come in the form of dividends, and they declare a certain percentage on the profit to give to the shareholders. Um, yeah, okay. Then there is, and when it comes to the dissolution, or when you dissolve the corporation, as you can hear asset division, you have a claim to a certain percentage. Shareholders can be shareholders of common stocks or preferred stocks. These are names of stocks with their own characteristics. So if you are a common shareholder, common stockholder, um, you have voting rights, but then you are last in the asset division if ever there is left. No, first you pay uh, the debtors, no? The creditors, and then the preferred shareholders. Preferred shareholders have no voting rights, but they have preference in terms of dividends and in terms of asset division. Once these people have been paid, only then the common shareholder can be given their share if at all something is left. And then limited liability. Limited liability is that your personal property doesn't get involved. You, you are not accountable with your own property when it comes to meeting the obligations. And the operations are run by these people. Okay. So let me, okay, before I do Okay, maybe we can do it in any case. Let me just see. So I wanted us to go for a break, but let me proceed. Maybe we can explain this shortly before. Okay, so like a general blueprint of corporate governance is in this way. Okay, so you have the shareholders who are could be individuals, and they can be institutional investors. These are these are people. They are organizations that pull make like institutional investors can be banks, can be insurance companies, can be mutual funds companies. Mutual funds are those that get pull money from investors and then they invest them in stocks and bonds and securities in capital markets and where the these companies share their part of their business, rather raise capital through those securities or financial securities that come in form of documents, in paper form and certificate of ownership in forms of stocks and bonds. Bonds are like money loaned to the organization. So you are a bond holder where your money can be returned at a certain time with agreed interest. So these are institutional investors, and then you have other corporations that invest in the business corporation. I hope that I don't know how to make these things small because I hope that they can fit what I'm going to write on the screen. Then you have board of directors that represent board of directors that represent the who shareholders. So you have them here. Okay. Okay. Board of directors can have subcommittees and they can be called what? Remuneration committee or compensation committee. They come here. These are the subcommittees, okay? And then also audit committees and what I can fit here just for purposes of audit committees. If the other people who will report on the board of directors can give us more details of this.
Yeah.
And then also you have ethics committee or governance committees. These are the subcommittees that work with the board of directors.
Imagine everyone self-strikes
Right.
once.
Okay, you guys can finish it.
So that.
What's
And
for
then
lunch?
with
What's for lunch?
this you have
You have an Indian teacher. It's rice with 1.5
You have
chapatis
who?
each.
What's on the side?
On
we are the
next
executive committee.
Okay.
So you have CEO,
This is an Indian lecturer or student.
executive, those who are directly
Lecturer.
involved.
Do the nationality.
So I hope that
She's Indian,
uh,
but she sounds
Walter,
Asian,
your
right?
question is being answered
Yeah,
here.
sure.
You are the
We
CEO.
have, we
You
have a
have
lecturer who's
also
really old, but is Brazilian. Teaches us
CFO
critical thinking.
or COO, Chief Operating Officers. Okay, and then you have
So
managers.
he's trying to teach us how to think. We don't know how to think.
For purposes
Let me
of
just stand on
space,
my
we do like
Oscar.
this. Just
We
to do
don't
this.
understand how
All right.
thinking
How to
works.
think.
Then you have
Very
managers and
easy, just
employees.
think.
Together with the managers and employees, along with them, you have the creditors. Well, this is just for, we can put it lower, but just for purposes of space. Let's not follow hierarchy. Just people who are there. Then you have who else? We are saying that other people here, creditors, financial investors. Okay. Creditors, sorry. You have financial institutions, investors. You have who else? Creditors, basically bondholders are creditors. Okay. Yes. Okay. Don't worry. So and then you have other stakeholders. Okay. Other stakeholders who are who? Suppliers, customers. Okay. Government, local governments, all these. Yeah. All right. So this is basically the general structure, the blueprint of how the corporate governance. We said customers, suppliers. Suppliers can be creditors, right? But then also your government, local government, anybody else. We are going to see in the next slides. Community. Okay. Sorry. Oh, I lost the screen. Is it still there? Okay. So that's how general structure for the blueprint. Corporate governance. It doesn't want to show itself in full. Okay, I think we have reached the limit. I mean the screen just ends there. All right. So you have a picture. These are the owners, and the owners are represented by the board of directors. Then they appoint the executive committee that are in charge, responsible for the operations. Board of directors oversee the operations, they manage, and then there are others who help the executive committee and other stakeholders. Right. So with this, we can go for lunch, a little break, and then we can continue, say, in 10 minutes or so. Yeah, let's just say 15 minutes. I don't know why my PowerPoint doesn't like to work. It doesn't respond to my keys normally. Okay, so where are we? Yes. Okay. So we talked about the blueprint or the general structure, can say, of corporate governance. All right. So who are the concerned parties? We have the stakeholders who are the one who constitute the biggest part, um, the largest part here. So I don't see the message. Okay. So and then you have the shareholders who are represented by the board members and also by extension the members of the executive. But then the board members may or may be a shareholder and may or may be an executive member or vice versa. A member of executive may be a board member or a shareholder. Okay, what can happen is ideally, actually, the people are questioning that now. The There are some who, this Peter, I couldn't. What happens when I enlarge the slides? I don't know. I can't move it. It doesn't move. It doesn't. It doesn't go to the next one. Yun. Okay, that's good. Okay, so what was I saying? That some members, board members, may sometimes be a shareholder, which is not, according to the opinion of some, is not the best, because then you begin to have conflict of interest in the business, in the corporation. And there is also, in some occasions, you have the CEO being part of the board. Okay? So all that is a matter of governance, and people choose. Then they explain why they do that according to whichever approach of governance they follow, whether they are called rule based or principle based, and from there they kind of, well, they explain in their financial reports why they have not complied with some codes or some regulations, right? Uh, but that's what happens. There are some authors who say that the board member should not be a shareholder. How did that happen? That the board member becomes a shareholder because it is used as an incentive by the organization and the executive members too. When they work for a lot of.
It's time to rise up.
This putter is like nothing I've ever seen before, and the company that's designed it reckons they've come up with a groundbreaking new way to putt to help you hold more putts. Let's see if that's the case.
They are stockholders, so it's an incentive to them. Okay.
I am very intrigued, but also excited about trying this new putter.
Yeah, I do that, but still, when I do the presentation mode, it still
send me a manual to
still
explain how
gives
to
me
use
problem.
the putter. They reckon the traditional way of putting is flawed. The way that we put normally with our eyes
Anyway,
over
let's
the
see.
golf ball and we're almost looking to the side of the target is incorrect. And they reckon with this putter, the way that you use it is a much more efficient way because they've used knowledge from other sports.
Especially in a slideshow, when I do that,
I've been looking at the target when I'm throwing my dart, or if I'm throwing a ball, I've been looking at.
So you have now the stakeholders
I wouldn't be looking at the ball
for
as I'm
the
throwing it.
operation and
They reckon with
stakeholders.
this style, you can be looking at the target.
So
as you
while these are familiar, you have the shareholders, and this,
there's lots to dive into in this review, and I'm going to do.
employees,
Most importantly,
supervisors,
I'm going to test it against my putter to see how it compares. So they reckon on
interest groups could be anybody, media, customers, coalition, even some companies that may have interest and pressure groups, that they are trying to advocate something in favor of other groups, or to rally the corporation towards a certain project, towards a certain benefit. Okay.
Weirdly, you're not allowed to stand on the
So before we go to these, the next slide of the types of corporation, I'd like to show you a video of the stock exchange, something that will hopefully help you understand more about stocks. Just hold on a little bit.
But that wasn't a bad first effort. So I'm not standing on the line. I'm going to pull it back and slide it. I must be aiming incorrectly. This is so different to normal putting. Like completely and utterly different. So I have to stand to the side, pull it back. We get one in. Right,
what happens with these? Okay, is
practicing with this putter, getting used to it, and
it's a general one, or rather, it is. You'll see a lot of information from the US. But my point here is just to give you, my idea is just to give you a general information about the corporation, how people buy stocks, not stocks or equity or share stock, shares of stock or just share or stock. It's all synonymous. These are the paper documents, the certificate of ownership that you get, and with that uh, document that you have, the financial documents, you can earn profit and all these things.
Hey
You can make
guys,
money.
I just decided to show
Okay, let's
Hey
listen to
guys.
this.
Anyway, I decided to show you something that I got from Smith.
Sorry about that. Let's see if you hear it now. Are you okay? So basically, that was just to don't worry about the very complicated things. Just the idea of the influence of the stock market in the economy and how you can be a stockholder. All right. Now bringing it to the Kenyan context, let me see whether I can find. Just hold on. Okay. Sorry, I cannot. I cannot find the one. Maybe I'll just share it with you another time. There is one here that I have. Um, just bring it a little bit. Let's come to Kenya when it comes to how you can be a shareholder.
The market has been a bit subdued over the last 2 or 3 months, but we will be joined live at the trading floor of the Nairobi Securities Exchange. As you'd imagine, it's an interesting time to be at the NSC. The market has been a bit subdued over the last 2 or 3 months, but we will be joined by the Chief Executive Officer, Mr. Geoffrey Odundo, who will be shedding some light, including just starting with the basics of making sense of how to start at the NSC. Let me just bring him on board. Geoffrey, thank you so much.
Thank you for having me.
Just to take us through this, how does someone get started at investing with the NSE?
So, investing in the stock exchange is a very easy process. Now, it starts by you opening what you call a central depository account. Now, where do you open the central depository account? Now, every stockbroker is a licensed central depository agent of the Central Deposit Corporation. Now, if you go to your stockbroker, they will be able to open for you an account. And opening an account is free. All you need is your ID and a photograph. And some brokers actually are able to actually take those photos at their premises. So once you open your depository account, you're then able to start trading. Now, in order to start well, it's important to listen to the broker's advice. What they will do is that they will tell you this is the range of stocks available, these are the prices available. The minimum number of stocks that you can buy of any company is 100 shares. And using that, you then deposit your money with the broker's account, and then they can acquire for you the shares. They will tell you which are the best valued shares at what point. You'll then be able to provide the funds, and they'll execute for you, and the money will be credited to your depository account.
Okay.
So it's a very simple process. For those who are not very familiar with what shares are an investment asset. You're able to acquire ownership of an existing company. So companies that are on the exchange have issued shares to the public, and you're able to acquire shares. The minimum number of shares that you can acquire and become an owner of the company is 100 shares.
Okay.
So it's a fairly simple process, and a lot of Kenyans have participated in the initial public offers of these companies. So clearly, it's a process that you can understand fairly quickly.
I see. And just a quick question. When I put my money in at the stock exchange, what determines how long it should be inside there?
So investing at the stock exchange, you can come in for two reasons. You can come in with an intention to hold your shares over the long term, and that you primarily be looking at getting annual dividends. But you can also come in and trade with a trading objective. Now, share prices normally go up and down depending on demand. It's a demand and supply driven market. So if demand is high, the price of the share will go up.
Yes.
Demand is more than supply, basic economics.
Yes.
And vice versa. It also depends on the state of the economy. Mm-hmm. If the economy is rallying up, if it's performing extremely well, companies perform well.
Yes.
And hence the demand for shares go up.
I see.
So if you buy in today and the share price goes up, say 10%, it's an opportunity for you to sell. Mm-hmm. And again, wait for the next entry point. So there's a way that you can trade, and using a very good broker, they'll always keep you alerted on how companies are performing, when they're going to issue the next results, when is a good time to come in, is a good time to sell, and we encourage that because one of the fastest way of making wealth or building your wealth is actually to trade.
Okay.
So we encourage people to get some activity, have some stock for the medium to long, but also have a portfolio for active trading.
Speaking of performance, the last couple of months have been a bit what is called bearish. The market has been subdued.
Yes.
What are the factors underlying the trends that we have seen?
Okay. So first of all, I want to avert the fear that markets are overly depressed. They're not. These are cycles. This is not the worst we've seen. I think in the history of the NSE, the markets have gone to great lows than where we are today. What you're seeing are normal cycles. Now, we started off at a very bullish or aggressive year where the index was 3,711, and that was a good start for the market given that we just finished an election year. And we performed extremely well. In fact, on our two big products, which is the equities and the bonds, we were up 32% on equities and 30% on bonds from January to June.
Okay, I think we can stop there. I don't know if I hope you have got some idea how you can own shares, how these things work, just a general idea. So people need, when they want to increase the capital, they need more capital, they can make their shares public. Okay, public meaning that individuals or other or institutional investors, it's open to others to buy their shares. Okay, and with that they can earn money because shares, the price changes. So when you buy at a lower price and you now sell at a higher price when the demand is high, then people earn income from that. So basically, that's how things work. And in Kenya, you need to enroll or register with the help of a stockbroker, and then they can help you earn money. But it's just for you to have an idea. I hope you have got some basic idea of how it works. Okay. So now, basically, we have been talking about corporations that are listed in the stock exchange. So the type of corporations are listed companies. Stock exchange is like the market where you can sell your shares to the public. Okay. So listed companies, and then you have family-owned business. Family-owned business basically fall under what we call private companies or closed corporation. Where you will digest that a little bit. Then you have not-for-profit corporations or organizations. That's what also many of them, they are also called like limited by guarantee. Okay. And then you have parastatals or public institutions. All right. Public in the sense of government owned. Okay. Government or state owned corporations. Listed companies are also called public corporations. We'll explain that shortly. Okay. So we have, you tell me, slideshow. Hopefully it works. So companies that are listed companies or public corporations are, they raise capital on stock markets. These are the things we have been seeing. So mainly we've been talking or speaking about listed companies or public corporations because the shares are open to the public, open to be bought and sold. All right. So that in so doing they can raise capital. So members of the public can purchase the shares, and the shareholders consist of individuals or institutional investors, where I explained to you that earlier. And then again, there is that separation of ownership from management, and the aim is a maximization of profits. So there are two types of corporations that are for profit, and these are the public corporations that are mainly listed companies listed in a stock exchange. Stock exchanges where you can like it's a venue for the market for buying and selling shares of stock. Okay. So you have there are many examples of, I mean, if you want to know, they are all listed in Aerobic Stock Exchange. The names of the companies, if you need to invest. But usually, with the help of a broker, they can help you. Only that with a broker, of course, you will have to pay some extra money. Yeah. There are people like that we heard, no? We learned that Warren Buffett started uh, investing in shares even when he was small. I think he was 10 years old selling newspapers, and he started with his own little ways of buying and selling shares of stock. I don't know. I think you need to have a bit of business mind to understand all this. Yeah. At least the interest. Okay. So I was saying that you have mm, companies or corporations that operate for profit are the public corporations because they raise capital from selling shares of stock to the public. All right. So you have, so it's called also open corporation. Whereas the family or private companies, they also operate for profit. They are called closed corporation. Closed because the shares are not open to the public. They are not listed in the stock exchange. People cannot trade, cannot do business, cannot invest with through by purchasing the shares because normally the shares are held or owned by managers or the members of the family. Okay, so the management is directly influenced by the family members. It's owned by a small group or family members, mostly uh, private companies that are not listed or shares are not traded are family corporations. Okay, so their aim is to maximize families' wealth or legacy. So you have Bidco, Naivas, Taskis, Family Bank Limited as examples of these. Right. Then you have not for profit. So sorry, these other ones of listed public are the ones where you can well basically all these types if you are limited in terms of liability, which is okay, public and private corporations, I would say, because not for profit. I'm sorry about the noise. Okay. Not just getting distracted. So the companies that are listed, okay, we shall see that also in the when we look at incorporation. The companies are named, for example, yeah, you see they have the names limited here, okay, limited or corporation. That is to indicate that they have limited liability. Yeah, so these organizations are corporations that are listed in the, okay, some are listed, some are not, but the main characteristic is that they have limited liability. Let me see if at this point you understand what is limited liability. Can someone explain? I'm not even sharing the screen and you're not telling me. Okay? Uh, all right, sorry. Or maybe I've not seen in the chat. Okay. All right. Can you see it now?
Yes.
Okay, so I was explaining earlier that we have types of corporations, listed companies, family owned business, and not for profit organizations, parastatals, or institutions. Parastatals are government owned, either fully or partly, okay, or partially owned. So listed companies uh, are those that are listed, they need to follow a certain process so that they can be enlisted in the stock exchange, so that their stocks can be sold and bought in the stock market. All right. I, okay. So now I don't know whether those other guys will have been admitted, but um yeah, they can, then they are individuals or institutional investors, which I have explained. And then now the PowerPoint is not working. Oh, they have, as we said in the beginning, that they have the ownership is separate from management, and the maximization of profits is the aim. So these are some examples. There are many of them in the stock exchange, Nairobi Stock Exchange, that you can find if you want to start investing. All right. But then, of course, since if you are new, I think in the beginning it helps to have a stockbroker or somebody else who can guide you. Right? Then, private or family companies or corporations, they are owned. I was explaining earlier that public is also said to be open corporation, because the shares are open to the public, whereas private companies are considered closed corporation because the shares are held by only a few, no, and mostly family members, and that their shares are not traded, are not listed in the stock exchange, and they are traded privately with a small group and mostly family members. Is management of operation is usually done by family members, and the aim is to maximize the legacy or the wealth of the organization. So you have Comcraft Group Limited, Biko Limited. This is what I was saying. No, when you have a corporation, a limited with limited liability, usually a corporation is that what we were explaining. And then I was asking, what does it mean by limited liability? I hope you get it now. What does it mean by limited liability? Julie Monyi?
Hi.
Yes.
Okay, so basically, from what I've understood, in limited liability, we have shareholders who may take part in profits through dividends, disputes, or there's an issue with the business. They can't be liable for any loss, so their property is not affected at all.
Very good. Yes, that's what it means. Thank you. Just to make sure that you are following the conversation. Okay. Now the thing is not responding. So after that we have not-for-profit organizations. Sorry, I was just cause it hanged again. Okay. So not-for-profit are organizations that are funded by well-wishers for specific societal needs, and their governance is mainly focused on spending the funds in correct way, in appropriate way. These corporations are also called corporations that are limited by guarantee, mostly all of them. The others are limited by shares. Limited by shares because the liability only extend to their own contribution in terms of their shareholdings in the corporation. Whereas the nonprofit organizations, they are mostly limited by guarantee because they have individuals and probably also corporations that commit their contribution at the time of dissolution a fixed amount. That's why it's called limited by guarantee. Okay. So you have not-for-profit organizations, Action Aid, Amnesty International, and the like. And then you have the parastatals or public institutions, public in a sense of government or state-owned corporations. You have investment in commercial and development corporation. This is owned by the government. Kenya Bureau of Standards, Higher Education Loans Board, Kenya Broadcasting Corporation, and Kenya Radio Corporations, and many more. So, yeah, it's not responding again. Okay, so it's normally established by an act of parliament. Board of directors are appointed by the president, and it's fully owned and funded by the government using the exchequer or the national treasury, or at times or mostly under the corresponding ministry where they are relevant. And yeah, political appointments to the board of directors by the president. Okay, so now I'd like, okay, what happens? How does a corporation, a business becomes a corporation? Usually, you need to obtain a certificate of incorporation, and that you will do by filling in certain forms. Okay, and what happens is that you need to have your articles of incorporation, which usually contains or specifies the name of the company, your purpose, are you for profit or not, what the business is going to be about, and then the location of the business, and well, the nominal capital, the number of shares that are authorized to be issued to be available to shareholders, and the people who are initially forming part of that and their share, the capital holdings. I don't know, specific, yeah, mainly those ones. But I would like you to have a look, to look for yourselves. We'll be in in breakout rooms so that we go back to active learning. to identify. Sorry, first, how does a business get uh, become a corporation in Kenya? You can find that in wiki procedures. You can look at. I would like you to find them yourselves so that um, well, it's better than just listening. Okay, listening to me. Okay. So now, let me put you in breakout rooms. I hope you have got the instruction. How does the company, the procedure for becoming a corporation in Kenya? Okay. You can look it up in wiki procedures. And assign. Ayan, which room are you? Context Kenyan registration with other countries. So that was very good. How other countries do their own registration of companies or corporations. Okay. So now I don't know if you have another class, but can we have some volunteers who would like to take us through what they have found out? What about group 9? Breakout room 9. Breakout room 9. Okay. Nicole Muswanya and her group. What did you find out?
Good afternoon.
Good afternoon.
So what we found is to make it a corporation, you first have to find if the name is reserved. If the name is available, you draw up the memorandum of association and the articles of association. Those are submitted, and along with other requirements like the documents describing the company and all those things, they're submitted to the necessary bodies, and then they're issued with a certificate of incorporation for the company.
Okay, thank you, Nicole. Where do you submit your documents?
The registrar of companies, I believe.
Register of companies in the office of the Attorney General, right? Okay. Anybody else who would like to add? Thank you, Nicole. Anybody else who found some interesting points? Can you now be a consultant on how to start a corporation? These things, if you want to do them, you have to get a consultant, some lawyers, but at least some basic ideas you already have. You might not need to get a lawyer. Okay. If you want to start a partnership, a corporation. Blaze, tell us what you have found. What did you find out there in your research?
It was practically the same as the rest, because for even the WikiHow page that we had one for registering a company in Kenya, and the other which was registering for form a corporation, which was basically about like worldwide like corporations. So we did that, and also studied the other one. So they're practically mostly the same. It just depends on like the bodies that govern the countries and how the regulations are placed.
Okay. Very good. Very good. Thank you. I hope that you have enjoyed somehow finding out how to be a corporation, to be incorporated. I was explaining earlier that once you are incorporated, the name of your company becomes Kenya, whatever the names, no? Your name of the company, and then limited, or at the end corporation. Yeah. and that indicates your limited liability in, well, in meeting your obligations. Now, I'd like to share this screen because for the next class, I still have something to discuss. Like, okay, we'll do some research on, we were here, this review, discuss concept of cooperation types, process of incorporation. Then we are meant to do some research on corporate scandals and speak of corporate governance and pillars. And then now we are meant to discuss now for the next class about theoretical perspective. So these are meant to be group work, a group presentation. I have here like this because this was my initial allocation, but with the groups that you have given me, I need to now assign. I think we will have two groups here that will discuss, possibly to depend or debate these positions. A debate on agency and stewardship theory. It can be half of one group and half of another, and the other half of the other group of both. Okay, discussing shareholder theory and stakeholder theory. Now the thing is, I'd like you to have your written document for the report, the necessary information that correspond to these theories. Do a lot of research on, okay, stakeholders, shareholders, and then stewardship. What does it involve? The benefits, advantages of each if you follow the corresponding theory. And then you can have the debate in the sense of you say the points, and the others will say counter argument, and in that way you are presenting ideas. But also you can outline them in a PowerPoint so that later on in the class you can now discuss it in a more systematic way. But first, I would like that you present it in a debate form. Okay? And then possibly the other group, third group, will now start with also have to be ready on the shareholders, on the key players, shareholders and investors. We're not following this way. I'll send the distribution of this first part to Ian and to Moses and the two other guys from, sorry, I forget the names. At least for the next class, yeah, so that you can prepare. We have still to discuss, but I don't know, maybe we'll have an hour or an hour and a half. I'm not very sure how much we are going to take. I mean, how long we are going to take, but at least to be ready already for that discussion, the group reports. Okay, I hope you got me. All right. Okay, now just to sign off, and I hope that you can register for the class soon so that I can check the attendance, because without you on the list, it's a bit difficult to check the attendance, the class. All right. And yeah, I think basically that's it. Do you have any question? Okay, so as you sign off, just write something in the chat box, a comment or something that you have learned, one idea or any comment you would wish. And I mean, preferably one idea you have learned from class, from today's class. And with that, I think we are dismissed until next week. Okay?